welcome you with us here on Business Today. I'm Abha Bakaya. One announcement, the expectation of which caused mayhem in the market. It was a four-pronged blow with the latest inflation figures for April jumping to 7.79%, widening the possibility of further interest rate hikes as early as next month. The direct impact was seen on the rupee, which slid to a new low of 77.63 before recovering to close at 77.4 to the dollar. Stock market investors also saw red, with the Sensex plunging 1,158 points. The ground also slid from under the crypto markets, with the Bitcoin trading below $28,000 mark for a while this evening. Inflation hit an 8-year high of 7.79% in April, and it's worse than expected as RBI considers more rate hikes. Data released earlier today show that the figure jumps more than 80 basis points from March and breaches the RBI comfort level for a fourth straight month. Food inflation rose to a whopping 8.10%, with oils and fats, vegetables and spices skyrocketing. Transportation and household goods also rose nearly 10% in April. The inflation is the highest since May 2014, when it hit 8.33%. Our managing editor Siddharth Zarabi spoke with Madan Sabnavis, Chief Economist, Bank of Baroda, and Bhaskar Panda, Executive VP Treasury at HDFC Bank, to analyze the numbers.
Very clearly, these numbers a significant worry. And Madan Sabnavis, I come to you first. The numbers of April at 7.79%, I argue, could have been even higher, and this was something that Reserve Bank of India Governor Shaktikanta Das had spoken about earlier. These could have been higher if daily petrol and diesel price movements had been permitted. As you are aware, for the last 36 days, petrol and diesel pump prices have remained frozen again. Is the situation therefore far worrying than even these numbers at 7.79%, the latest reading that it portrays?
No, I think there is some comfort in the fact that the international price of crude has tended to stabilize. So I think this business of not changing the daily price for 30 plus days makes a lot of sense, because that at least reduces the noise in the market. But the fact remains that there has been a lot of stability. The kind of threat which we had earlier of crude oil price going up to $140, $150 per barrel does not look a reality right now. And I think there is reason for one to get some kind of comfort. Though I think in the current situation where the rupee has started depreciating, there is a kind of a double whammy which is there on the import side. So while the crude oil price per se may not be a concern for us today, definitely with the rupee depreciating, the rupee value tends to increase at the time it comes to be on the table to be taxed by the government.
I'll come back to you in a bit, but going to Mr. Panda. Bhaskar Panda, the issue really is that we are now seeing what would be clearly a very uncomfortable set of circumstances, as Madan was also pointing out, due to the way the rupee is also now behaving. And if we see the monthly build up pretty much from 4.35% in the month of September, this steep spike in inflation and close to 8% and perhaps more, how difficult is the price situation from a control perspective at this point of time?
So you have to take it in perspective. We are in a situation where we are just coming out of pandemic. Secondly, we are into another war which is disrupting the supply situation across the world. Third, we all know that all these things.
Right.
So we have got both supply side shocks, as well as, in India at least I can say very clearly that there is a demand pull inflation as well. So both these things are known to everyone. I think RBI is aware about it, everybody is aware about it. Second thing, if you look at the inflation numbers across the globe, including the number that we saw in US, they are overshooting any target for the time being. So therefore, this is nothing new as far as the India concerned, and we all know that, I mean, having maybe a couple of percentage points here and there, everybody agrees the situation right now. Now, how to control that and bring it back to, the expected range that, RBI has been targeting is something which we all have seen the action from RBI's front by increasing mid-way their repo rates, reverse repo rates, CRR, everything. So maybe some more tightening is there in the cards, and that might be a little bit helpful in, bringing down these prices.
Okay. I'm coming to you, Madan, on that very last point that Bhaskar Panda made. Some more tightening will help, and I would agree with him, especially for the demand pull side of inflation. But there is a very significant supply side impact also. What would you argue needs to be done beyond the extraordinary out of policy hike that the RBI did recently?
I think what you're saying, Siddharth, is right. When we're increasing interest rates, all that we're doing is that excess demand forces which would have built up are being curbed by making the cost of capital high. But if we're looking at what has really been driving the prices, I think they're more on the supply side, though of course I think supply and demand both go together. If you have not enough demand, the supply side issues will never have come up. So that one can always argue that way. But suppose we assume that RBI has increased the rates, can it bring down the prices of fuel? The answer is no. The government may probably have to lower the taxes out there. Can the prices of vegetables and edible oils come down? To a certain extent, yes. In case the harvest is good, prices of vegetables will definitely come down. And in case the global situation improves, there's a possibility of edible oil prices coming down. But they will definitely not revert to what they were earlier. If you look at the third category of commodities, which are the MRP-driven commodities, which could be manufacturing, but could also be services, I think lots of the companies which have announced their results have said that they're in the process of passing on the higher input costs to the consumer. The first round is over, they're in the process of doing it for the second round. Now, I think these are the prices which will never come down. So we may have a situation where statistically we could be having the inflation number moving downwards because of the base effect, but the absolute prices which I have to pay for my toothpaste or for my shaving cream or for my detergent, those are not really going to come down. So we're going to have this kind of a situation for a longer period of time.
This situation for a longer period of time, that's a stark point. And in fact, since you were talking about companies and what they are doing, let's also listen into what Sanjeev Puri, the CMD of one of India's largest FMCG companies, ITC, had to say to my colleague Ashutosh Mishra. Let's take a quick listen in.
Okay, inflation unprecedented hai, and it is not just to do with one product. You see, it is inflation is across a range of things. Energy and food both are impacted. So there is, all of us, including in ITC, are focused on tightening our belts. We're looking at efficiencies, we're looking at new pack formats, we're looking at new packaging sizes, and also finding out some innovative solutions and a combination of pricing actions.
Prices कब तक कम हो सकता है, जनता को बड़ी उम्मीद है.
I think it's you see, the situation is extremely uncertain, and therefore for anybody to predict is very difficult. So therefore I would of course, I do get a little sense that it will over time cool off as things normalize.
Bhaskar Panda, you heard Sanjeev Puri and that very short clip of an interview that the India Today group has done with Sanjeev Puri. Prices कब तक कम हो सकते हैं? What my colleague is really trying to ask is, and I'm asking you in turn, will the build up in inflation come down anytime soon, or would you tend to agree with what Madan is saying, that we are perhaps in a bit of a tight spot for at least a few more months?
So I agree with Madan to a very large extent. The base effect Madan spoke about is very correct. The trajectory of inflation may not come down immediately, given the situation that we are in, as I said in my very first opening remark. Nobody can predict when the war is going to go over. Nobody can predict, whether China will come back into, supplying whatever they are supplying to the entire world post the COVID lockdown. So it's a little bit of a, not little bit, actually a lot of uncertainty and a lot of things needs to be tackled at the same time.
Right.
So it's a very difficult situation. This may persist in foreseeable future. I don't think anybody can predict when it is going to end or come below, RBI's, inflation range. But hopefully with, interest rate rising, cost of capital going up, so on and so forth. So maybe we'll be able to kind of, arrest it. We cannot say that it will come down further towards 6% or so, but probably the rise in inflation, the way it has been rising, probably that can be arrested.